African assets have been hit especially hard by the sell-off in global markets, underperforming emerging markets as a whole in 2018. That's the reverse of last year's situation when Africa outperformed, especially in fixed income. Let's get the state of play with emerging markets reporter Paul Wallace, who is based out of Lagos, Nigeria, but of course he is here in Dubai this week. Paul, what are we seeing then in terms of the biggest impact from the EM sell-off?
Hi, Yusuf. The most obvious impact has been in the Eurobond market. Now, Africa obviously has some of the riskiest credits out there, and the impact of the oil price and commodity price crash of 4 years ago still lingers in many countries. So it's no surprise that Africa has been hit hard by the rout in emerging markets. But if we take a look at this chart on your screens now, it shows African yields and EM yields for sovereign dollar Eurobonds. And as you can see, African yields have risen much more than EM yields overall this year. African yields are now at 8.3%. This is somewhere we haven't been for almost 3 years. And we're talking about average government funding in dollars. So 8.3% is scarcely cheap. That's, very, very expensive. And the pain's been felt across the board, whether you look at oil producers like Nigeria or Angola or Gabon, but also some non-producers. Take Zambia. Zambia is the worst performing emerging market in the world this year, at least as far as its Eurobond performance is concerned. Its spreads are more than 1,000 basis points above US Treasuries. So some investors at least see it as being in distressed territory.
Right, Paul, it's Tracy Alloway here in Hong Kong. I'm wondering, is this happening just in the foreign denominated bonds, or are local debt also taking a hit? Because at least in some nations, I'm thinking Nigeria, South Africa, real yields are still pretty attractive, right?
Yes, it's true that in some nations, if we take Nigeria and Egypt in particular, stable currencies and high yields there have enticed a lot of investors. In Nigeria and Egypt, you can get yields of around 15% or higher, depending on the maturity. But even there, we've seen the market start to sell off somewhat in the last few months as the US-China trade tensions worsen and the Fed sort of sticks ever more steadfastly to its path of raising interest rates. But if we turn to South Africa, that's where you really see the pain. This chart on your screens now shows the net sales or net purchases of Rand bonds year to date. And this year we've seen net sales amounting to $4.6 billion, which is easily a record for South Africa. And we have data going back more than 20 years on the terminal. And with outflows like that, it's no wonder that the Rand has sold off more than 10% against the greenback, making it one of the worst performing major emerging market currencies this year.
What about bargains in general? I mean, you pointed to some of the key trends, looking at stocks, looking at fixed income. I mean, are we at a level where it becomes attractive for investors?
We're not seeing that yet, and that's the case if you look at fixed income or FX or equities. Some markets are kind of off the table for now for political reasons. If we take Nigeria, it's got elections coming up in February and March, and those are looking like they're going to be pretty tense and pretty close. And so most global investors are staying away from that country for now. Another place with elections coming up next year is South Africa, where people will probably go to the polls in April or May. And you can see it in the stock market, at least, that there's some investor nervousness. If we look at this chart, it takes the forward price to earnings ratio for South African stocks and subtracts the forward price to earnings ratio of EM stocks overall. And it shows that for years, South African stocks have been more expensive on a forward basis than EM stocks. But that gap has narrowed rapidly this year. And so what does that tell you? Well, it suggests that at least relative to emerging markets as a whole, South African stocks are no longer quite as attractive to global investors. One of the reasons for that will be the big outflows that we highlighted in the previous chart from the bond market, which is putting a lot of pressure on the Rand. So all in all, Africa is looking like it's going to be a pretty tricky place to invest for a while yet.